Today's video is on how to catch a market bounce. Now I'm filming this video after a shortened 4-day trading week, which probably the most exhausting trading week in 6-7 years, something like that. So I may speak a little bit slowly, but my partner asked me to do a video on the bounce and kind of what I saw when it started on the second trading day this week. So I went back and I grabbed my morning notes from Monday when I was first starting to look for the bounce and kind of what happened. And then we'll look at that day's price action. We'll look at Wednesday's price action, and we'll look at Thursday's price action. Those 3 days to kind of see what it looks like as the market changed and some ideas on how to find the spot to get in for a bounce and how to manage it once you're in. And so if you're interested in how to play a bounce, stick around for today's video. Before we get into discussion of the bounce play, I wanted to say that we still have the 2-hour free workshop available for those of you who haven't seen it yet. It goes over in detail 3 of the high reward, low risk strategies that we employ on our prop desk in New York City. In addition to that, the most frequent question I get on Twitter, via email all the time, is how are you picking the most in play stocks? I spend 30 minutes reviewing in the 2-hour workshop how to pick the best stocks to trade each day, which can be the difference between being a break-even or a losing trader and being consistently profitable. So if you want to learn about those 3 trade setups and stock selection, click on the link above, register, and check it out. When we're looking to catch a market bounce, we need to understand when should we be looking for it. It's not as simple as, oh, the market went down for a couple of days, I'm looking for now to catch a bounce. You have to have some criteria that you're looking for to have a favorable risk reward. Otherwise, you're just kind of trying to jump into a downtrend, and the likelihood of the trade being successful or the risk reward being particularly good is low. And so one of the things that I think for me is the easiest thing to look at is an acceleration of the downtrend. And we know the market has been selling off in December. And it was pretty steady. If you look at it on the daily chart, just kind of selling down. I think it was down 6, 7, 8 days in a row. But then that trend started to accelerate. We had a Fed meeting where the market was actually up. Fed announcement came out. Market didn't like the press conference, the things that were said, and we dropped, I think it was about $8 or $9 from the last 2 hours of the trading day, which was last Wednesday. And then that was the beginning of an acceleration of the trend to the downside. At the same time, in recent months, we've been trading between 260 and 280 on the SPYs. And when we broke through that 260 recently, I think a lot of people were targeting down into 240 or the low 240s, kind of a measured move. I know personally myself, I was looking for a new range to establish between 240 and 260. And so once we got down into the 240 area, that was to me a logical spot to start looking for an oversold bounce. The other thing that I do is I'm very focused on price action and acceleration of trends and things of that nature. And I'll look at market leaders, things like Apple, that after earnings were 210 and then they got hit down to 190, 180. That accelerated all the way down into the 140s. Things like that, when these kind of market leading stocks are also accelerating to the downside, that's when I'm kind of getting my rally cap on. But if I'm following people on StockTwits or Twitter, smart traders who are looking at other statistics and things like that, when I start to see more tweets about 97% of stocks are below every moving average from the 5-day, the 20-day, the 200-day, things like that are very rare, that you generally see at bottoms, whether it be in 2011 or 2016. When I start to see those things and it lines up with the acceleration of a downtrend, it's time to start planning about how to put on risk to catch a bounce. So once you have that mindset, you're looking for the bounce. The next thing is, how do you actually, when you're trading, intraday and you're watching the market move, and we're talking, by the way, I'm talking about the SPYs. I'm talking about the S&P 500, which we trade via the SPYs. Obviously, I was involved in the Russell via IWM and the Qs, which are the NASDAQ 100 technology as well. But we're talking about the SPYs today, which I think is pretty much trades the cleanest off of levels, and it's a great way to play market bounces. Not to say that you can't play the others. Definitely was in the others as well, but I think this one, for all levels of skill and experience, this is going to be your best bet, the SPYs. What I'm looking for is, on that flush on Monday, when we get below 240, is the market to look different. What do I mean by that? The pattern recently has been, not every day, but almost every day for the past few weeks, we've had these $3 or $4 pops in the SPYs that would just get sold, whether they happened in the morning or the afternoon. I'm looking for that to change. And so my plan is, and let me just show you my notes from Monday morning. This is day one when I was first looking for the bounce. My plan is on a flush on the open, get long, and then look for that $3 or $4 pop, and then look for it to hold, and then start to move up again. And so in this case, we're looking at the notes. I think support 2 that day. I believe we're opening, I don't remember where we opened on that day. Actually, could check the chart and see. So we opened below 240. And so my S2, generally by S2, I'm starting to get pretty aggressive, kind of looking for the bounce. S3 is kind of my worst case scenario. But by S2, I'm looking for the market to kind of find a bottom. And when I'm buying into S2, what I want to see it do is get back above S1. So in this case, S2 was 236, S1 was 238. I want to see it get above S1 at a minimum, and then I want to see it challenge R1, which in this case was 240. And if it challenges R1, I'm feeling pretty good because I've got some room to work with. I'm in from, say, into 236, I'm long. If it pulls back even to support 1, 238, I can see if it holds there. Preferably, I'd like it to hold even higher, but that's kind of an okay spot, as volatile as we've been. Or even best case scenario is it rips to R1, has even like a 50 cent to a dollar pullback, and then takes out, rips to R1, 240, has a shallow pullback and takes out R1. That's what I'm adding to my positions. I want to add to the calls that I bought. I want to add some stock, and then I'm looking for a significant bounce. 242 to 244, somewhere in that range. It's day one, and so day one of the bounce, if the bottom is 236, $6 to $8, that's pretty good. Overall, the market's so oversold, we're looking for 15, 20 points over a 3 to 5 day period, something like that. And so why don't we take a look at the price action from day one and kind of see what happens. So market opens, we're below 240, we flush down through 238, we kind of catch a little bit of a bid at 237, move sideways, then boom, we get hit at 10 o'clock right into S2. Immediately, big green bar back above 237. We hold, and then actually one of the, who was it? I think this was when Tepper, the big hedge fund manager, said that he had been buying. And it was either that or one of the Fed guys making some comments caused us to pop to 240. So it was great. We were in from below 237 to 236. We popped to 240. Our mindset, by the way, this is something different. Our mindset on normal days when the market's going down or up is we catch a move, we sell. We catch a move up, we sell. We short, we catch something down, we cover. But when I'm looking for a larger market bounce, into that first big up move, I might sell some stock, but if I'm in options, I'm actually thinking about how do I add to my options? What do I need to see? And in this case, what you can see is we're looking at the 5-minute, it got up to 240, moved sideways for one bar, and then red bar, another red bar, and before you know it, we're below 238. So at this point, I was thinking, all right, it might still work today, but it's not looking good. It's probably less than 50-50. Versus when we bought down into the flush to 236, big green bar holds, then a bunch of green bars, we're looking really good. At that point, I was thinking, 65, 70% chance this might work. And then we just started to slowly trend down the rest of the day. Eventually, we started hitting out of some of the positions, I think below 237, and then eventually we consolidated below 237 and broke to the downside and hit out of some more. And ended up taking a loss, but not that much compared to the amount of risk that we had on for the bounce. And I think we held some positions because the idea was we were very small, and then the next day, if things acted well, we could reload. So let's look at day two. So here's day two. The interesting thing about the end of day one, it was the half day right before Christmas, and things were we closed at the low, we were drifting down in the after hours. So I was mentally prepared coming in the day after Christmas, like global markets were getting destroyed, was maybe we're gonna actually be down. And so the most likely scenario on the downside I had, we kind of game planned for if we flushed into 232 and took out Monday's low, how would we, what options would we buy, what stocks would we buy? And then also we game planned if actually Monday, the overnight futures had been the low before even Wednesday's session, like what do we need to see kind of on the upside? So we're game planning for both directions. So again, we're still in complete and bounce mindset mode and understanding, wow, this is great. We're opening in the low 230s. If we flush into 232, we've got a plan on how to play the flush. If we actually shoot up and right on the open and hold above 237, which was kind of a trigger area for me on Monday morning. Remember on Monday morning when we bought into S2, that big green bar took us right back above 237. So on the open on Wednesday, what basically I was looking for was if we moved up first and held above 237 for 20, 30 minutes, was use that as kind of as a spot to load up. The other thing is I'm still open to the possibility at this point. I mean, things were like very volatile. People were talking about crashes. I think my assistant asked me probably to handicap a crash. I was open to the possibility, but I didn't really think it was more than 10%, maybe 15% at best. And when I say crash, something into the high 220s, something like 227, 228, which would be $30 below the prior Wednesday's sell-off from the Fed meeting. And so I thought it was extremely unlikely. I thought hitting 232 was probably, we had a good chance at that, maybe like 35, 40%. And I also thought we had a pretty good chance of just holding above 237 on the open. And so I'm constantly updating, doing my Bayesian updates. What are the percentage chances? And the main thing is going back to my point earlier. I want to see something different. I want to see an up move. I want to see it hold. And that's it. And so what we see here is looking at the chart, we kind of, on the open, we ticked up a little bit, but we weren't getting above the pre-market high. So we weren't holding above 237. Finally, at around 11:30, unusual time, we started to tick up a little bit. We got above that 237, but there wasn't much of a consolidation. We kind of then just went straight up to 240. Now, depending on how aggressive your trader you are, if you're a trader who wants to see the market stick, above a key level, we didn't get that in the 237 area. We didn't get that until we finally got to 240 midday. And you can see on this chart, I left the markups from when I was doing the morning meeting, so you kind of see what my mindset was, and also to remind myself. What I was thinking was on this day was if we could get into that 238 to 240 area and consolidate there and then break through, then maybe we'll get 242, 243, something like that, and that would be a really nice bounce. And then we would trade accordingly for the next few days for a larger move up to the low 250s, something like that. And so you didn't have the opportunity, unless you were buying right on the open above 235, you really have to wait to see us come into 240, then pull back and look for the shallow pullback. And it was shallow. It was shallow to the point where I actually tweeted out, we're finally, for the first time since the Fed meeting, buyers are in control. And so at that point, that was kind of me trying to give you a heads up. Very busy on the desk trading, but wanted to give people a heads up to say, look, if you're looking for a bounce, and you wanted to be conservative about it, we've actually now got buyers in control. And basically the pullback from 240 was very slow and organized. As soon as we got into 238, immediately got bid up, made a new high, and then the next pullback was exactly what you wanted to see into 240. It held, and that basically was the beginning of actually a $5 or $6 up move into the close. And so the one thing I'll say about this is if you waited to be a believer until midday and we started to hold in the 240 area, and you wanted to see us hold above 240, that's exactly what you got. You couldn't have asked for anything more. You could have placed your bid at 240.10, bought, stopped below 239.80 for some, 239.50 for the rest, and risk reward probably, even if you were playing only for a move to 242 to 243, risk reward of better than 5 to 1. Ended up being about a 10 to 1 with a straight up move into the close due to these big rebalancing of the people moving out of bonds into equities. And so that was a huge driver into the close that day. Now I thought it was overextended, so what I did was I shorted pretty heavily above 245. Really wanted to actually hedge off my options risk as well as actually go net short because I just thought it was too extended. If you look at the move in the morning, pre-market we were down close to 232 overnight. By the time the market opened, we're 235. 240, I think we were at 246 into the close. So it was over a $10 move. I thought that it was overshot by $2 to $3. And so my mindset was we could easily see a gap down the next day and then maybe a $2 to $3 pullback before the beginning of the next leg. So I want to show you day 3, and then we'll wrap it from there. And again, I'm showing you these multiple days because we're playing this for a multi-day move. On the desk, most traders were playing for a 15 to a 20-point move. A lot of traders, since we got that $10, $11 move on day 1, took off almost all their risk because it just was an overshoot. They were probably expecting a $5 or $6 move on day 1. So here's day 3. We gapped down to about 243, so it was about a $3 gap down. But again, I thought that move from 355 to 405, from 43 to 46, really wasn't meaningful to me. So even though you could see the SPYs were gapping down $3, in my mind, it was really more like the equivalent of a $1 gap down or a 50-cent gap down, just because of that weird mark right into the close. And so I was mentally prepared for the market I wanted the market to support above 240, but even if it flushed below 240 and then got back above 241, thought maybe we'd have a shot at working our way back up to 244, 245. In the case of day 2, it actually overshot to the upside again, right into the close. There was some more huge rebalance. The stock market has sold off so much the last couple of weeks. The 60-40 portfolios got misaligned. So there's hundreds of billions of dollars that have to be put back into stocks. And of course, I knew that going into the day 2 and day 3, but I forgot right into the close. It would have been more helpful. I would have been more bullish on those last couple of dollars. We just went straight up. There just wasn't enough liquidity to handle those buy orders. But if you were looking, to capture this move on day 3, and you were in the first couple of days, what you really wanted to see was things balance out, the market kind of hold that bottom blue line. It did not. It took it out, and then notice we got back above it. We had the strong, I guess that was around 230. The buy program was actually on both days around 230. There was, the final up leg that's on day 2 was at 230, that those big buyers came in, and same thing on day 3. And once it got up to 242, it held and took out the pre-market high and then shot up another $5. And again, same thing, the upside move above 245, I thought it was extended, shorted again, actually got burnt a little bit there because I was hedging off a little bit too soon, probably about $1.50 too soon. And then looking again for today, wasn't really looking for as much of a pullback today. Buyers had really taken control. I thought maybe we'd get some people start to chase. But in terms of catching a multi-day bounce, I thought this one played out pretty well. It definitely wasn't perfect. Obviously, day 1, you saw we caught a $3, $4 up move. Then it rolled over. We had to hit out of most everything. It wasn't until day 2 where we started to hold above 235, where things were good, and we were able to capture that move. I'm now in the mode of, we got up to 251 and change today, which was the high from the day after the Fed announcement. That could be it. I know other traders that I follow, were looking for a bigger move. That might have been it for now. I'm not saying we're going back down to 235, but we could pull back into the low 240s before the next up leg. So hopefully this helped, and see you next time.